What's going on, fam? Welcome to the Get the Bag podcast. I'm your host, Gladia. Got my co-host Tim. What's going on?
What's up, fam?
What's up, fam?
What's going on?
This is our 30th episode. We're
Yep.
just we're just talking about it. We're like, oh, should we do a check-in or? But I
Mm-hmm.
think we're gonna wait to do the big fitty.
Mm-hmm.
Um, but lots of episodes down. Just happy to just be doing this and helping everybody out. But as we always say, because it's a live show, please post your comments throughout our conversation. Ask your questions. Of course, hit the like button, subscribe, follow us on IG. All the information you have for that is in the show notes. Now, today's topic is one that actually we do get asked a lot, and it's not talked about enough, at least in detail. Is budgeting. Like, if I'm getting started in a real estate business, like how do I budget? Why is budgeting important? We're going to go over what we've learned throughout our experience in starting a real estate business. Tim has some
Mm-hmm.
experience background starting other businesses, and why the like your budget is the most important aspect of it, and
Right.
creating these really important habits early on in your business. So um, maybe to start off, we can talk about like why budgeting is important. You know, Tim, your kind of experience. You started, I guess, 3 or how many businesses before you started your real estate business?
Uh, um, this I think it's more than three, but
Oh, my bad. That was
yeah, yeah. Some of them were short-lived, but just having different ideas. But I think a lot of times when someone starts a business, it's like a kind of a rush,
yeah,
and you know what you're going to do, as in your service or product, and you're trying to just get your services or products out there, and
hmm,
you kind of know your craft and how you're going to do that, but you don't sit down and do the numbers behind that. And a lot of times some of the things that um, are expensive could be calculated or thought out a little bit more, just because
hmm,
there might be cheaper ways to do it, right? So I think when you people get into businesses, especially the real estate side, the the costs can sneak up on you on sometimes without budgeting the right way, right? And and
yeah,
that's the same way with any other business as well, because especially if you're going in a business, you might be working day to day at the job that you know how to do, and this is you're going to start a business, similar business to that, but you just don't
hmm,
know all the numbers behind it, right? What's the
right,
overhead, or what you're going to spend, you know getting an LLC, what's that cost, or
right.
what tools you're going to need, what people you need to hire. All these things have to be factored into your budget when you're starting out. Some people are very analytical and they'll do it, but
Hmm.
a lot of people just kind of jump into the fire and
It's
then
not for
figure it out
everybody.
later. Yeah.
Yeah, it's well, especially with real estate, it's specifically wholesaling, or probably really many aspects of real estate. Not all of them, like fix and flip, wholesaling. Those that requires it's active income. You have to work for it. You have to have your process set in place. Meaning, if I close five deals this month, I can't just stop working and then I'll close another
Right.
five, unless you have the
Hmm.
systems and the team behind you. You have to keep it's an active business, and one thing I've learned really early on is it's all about your profit margin. How much
Hmm.
can you save in your business? A lot of times, people go in, if they're starting in a new business, they don't come in with a plan, in terms of like, okay, this is my budget and I'm gonna stick with it. How many times, I'm definitely guilty of this. How many times did you overspend,
Hmm.
like what you were supposed to? because you're like, well, somebody said to buy this list, somebody said buy this and that and that, and it just didn't work out. So it's really important to have a plan set out and not compare yourself to everybody. But budgeting is really important because without your budget, you're kind of lost. Like what's
100%.
coming into your business, what's going out. You have to constantly be checking in into what's happening, and that kind of goes into our next point, which is what are some things to be aware of when budgeting for your real estate business? So you mentioned earlier your LLC.
Hmm.
Now, some people can do this with their county or with the state.
Hmm.
I'm sorry, register it themselves. But sometimes you want more hands-off stuff. So I set it up with Zen Business, but
Yeah, so did
there's
I.
a whole ton other. Well, they'll actually do it for you. You do have to pay a fee, but it's something that it's taken care of. You don't have to worry about it. But what are some fees that when you started your real estate business, you kind of had to, like, did you set up your LLC before you like got your first deal? Like, were you that kind of person, or did you
Hmm.
set it up after your first deal?
I think mine was already set up because I had a different business, and then I just switched over to the real estate. So I
Mhm.
already had a LLC kind of set up, and I was going to how that was going to work is that LLC would be the holdings company, and then like the real
Right.
estate is one side, and then my other business is another side. So it's kind of how I set it up. But like you said, most people don't have an LLC when they start, and that's perfectly
Yeah, and
fine.
that's okay.
Um,
Right.
yeah, yeah, because initially you can do your first deal, using your name. It's not, it's not a bad thing, but
You want to
it's
protect
definitely if you,
yourself.
yeah, you definitely want to protect yourself, and when you do close your first deal, then spend the money to actually get it done, like using services like Zen Business or LegalZoom, depending on what your budget is, and then or having an attorney set it up for you. You can do that route, or do it yourself, type of thing.
Right.
But some other expenses were like getting a coach. Really, that was an expense. Like people don't consider that as an expense, but it was. Um, and then like pulling the list, getting a dialer
Skip
because I got a
tracing it.
dialer. Yep,
Right.
skip tracing it, um, and got a dialer first, and then also later on I kind of bought some buyers list as well, so I
Mhm.
could dispo faster. And I'm trying to think what else I had at the beginning. Pulling the list, skip tracing it, um, and then the dialer. Oh, and then you get into um, DocuSign. There's some free services for that. So, but yeah, I'm trying to think what else. I can't.
Yeah, I mean,
I think that was about it
there's
when
so
I
many
first
things.
started.
Yeah, like there's like your services, and that's why you have to come in with a plan of like, okay, this is my budget. If you especially if you're on the like a really low budget, like
Hmm.
there's some people I know $100, $300.
Yeah,
I
I
know
know.
somebody, but it's like it's being efficient with the services that you have. A lot of times when people come in, they'll just like they get everything right because that's what everyone's saying, and then they end up with like paying amount of money without even closing their first deal, which is fine. But you have to set the time to like create the process in that. And so if you're just starting out, like I know somebody that closed has been closing deals and like I think their monthly budget on like just services alone is like maybe 400 a month because they've just streamlined it so well. But I mean,
Yeah.
there's so many things to like look out for when it comes to that. Like on top of like the LLC, those little hidden costs that that comes in, especially if you're going to hire somebody to take care of those things. But um, just in general, like just your time to like review stuff. I was not, I'm not an accountant or like that stuff, and it's not a very sexy.
Yeah.
It's not a sexy thing. Like people don't talk about accounting. Like, oh yeah, this is how you should do that. Like usually once people start like closing deals, they'll hire an accountant. That's like one of the first like really big things where it's like, hey, you take care of
Really
this.
big, yeah.
And that's probably what I'll do, or I've kind of had my wife do it. I'm like, hey, you contribute to the business, do
Exactly.
some accounting stuff. But it's important to like start these habits of auditing your business. That was one thing that's one thing to look out for when you get started, is audit your expenses every month. I think I was telling you yesterday, like in the beginning, I would just like order stuff and I wouldn't even look at my business bank account. I would just be like, it's kind of
Yeah.
like, well, shit, I don't know how much I spent. I don't even want to look. Like how much those text messages spent. So it's important to audit every month, look at all your expenses, and of course, getting a business bank account. That's also another thing, to make sure you're separating your personal and your business expenses. That's one thing I didn't do, and it makes it a little tough come tax season.
Mm-hmm.
But auditing your business is super key, because there's a lot of times. How many times have you checked like maybe 3 months later, you're like, I'm not even using this service. Like, why am
Right.
why am I spending money on this? And then you have to like go in. So it's important to audit, if it's on a weekly basis, like on a monthly basis, to see if like,
Right.
if it's, if that's a good time to keep it. Is it
Mm-hmm.
making me money in my business? If not, then no.
Mm-hmm.
So
Yeah. Yeah.
those are the key things to look out for.
Yeah, I agree, because those expenses kind of sneak up on you, especially you forget, auto pay and all of that, because it'd be a service where, like, you're paying monthly, like, like Adobe something, PDF or something like that, right? Because
Yeah.
of all your contracts and stuff. So you just got to be careful, that, do you really need that service, or you can cut certain services off so you can increase your, let's say, your profit margin or your revenue, based on that. So those are a lot of things that you do have to be aware of. And sometimes you get so busy, you don't go back to the numbers and understand actually how
Right.
much you're making. You just see the money coming in, but not the money actually going out to get that money, right? So I think
Right.
that's an important aspect.
Yeah, and it's important to whatever, s- a lot of people have mentioned this before, is like, okay, I close a deal and they spend all the money, either balled out on like stupid stuff. I mean, what a lot of times, excuse me, that you close a deal, maybe you had some back payments, or paying some bills, or paying some credit card debt, whatever it is. We've all been there. I definitely took a big chunk
Hmm.
to pay off stuff,
Yeah.
on my deals too. So it's also knowing how to allocate your funds, and so this is kind of where our next point, which is profit first. Highly recommend that book in general, and then I think there's another one. I think it was Chris Jefferson's Connect, Profit First. I think REI. Yeah,
Oh
Profit
yeah.
First for real estate investing. I started listening to that on the audiobook, and it's so awesome because it takes the Profit First principles, but it flips it into a real estate investor. So he talks
Mm.
about, let me remember the author's name. I think his name is David Rector. um, he um, he talks about like, okay, wholesale. If you're a wholesaler, like this is how you can organize or allocate your funds, because
Hmm.
what happens, and we've all gone through this, where we don't pay ourselves first, when
Yeah.
we get a deal, and then like the other thing is we don't allocate for taxes, and that's another thing that I didn't mention, but to be aware of is, I mean, we all started a business. Personally
Hmm.
started a business also because for the tax benefit, because I knew I was making too much money, in my 9 to 5. And, I'm married as well. And we were getting like crazy tax bills, or owed so much to the state and feds. And I was like, okay, what are ways? And of course, buying real estate would have helped. But a simpler like baby step was like starting a
Mm-hmm.
business, um,
Right.
and running. Because I think the law is your first 3 years of business. I don't know if it's like if it applies to any. I'm assuming it does. Is you can actually go negative. You can lose money.
Mm-hmm.
Like say you close like a $5,000 deal, but you spent 20,000 on like whatever if you
Mm-hmm.
did the expenses correctly. I want to say, and I'm not an expert by any means, but it's helped me so far the last couple years. Is
Me
it's
too.
helped me out in saving money by going negative. So that was honestly the main motivator. And I'm like, oh, I need to start more LLCs. So these are kind of things that kind of I understood when it came to like taxes. But you have to allocate money for taxes, because you're going to have to owe money at some point, especially the more money that you make. But how many people allocate money for taxes? Not
Right.
many.
Right.
So I think it's important to again build this like foundation, accounting foundation, in your business, because otherwise, come tax season, you're going to be pulling your hair out, or
Mm-hmm.
maybe some of us. Um, and just it's just a pain in the neck. So what are some things, and I'll go into the profit first, but what are some habits
Sure.
that you've created in your business, Tim? Because I know you do a really good job of like reconciling stuff every week,
Mm-hmm.
in terms of your budget and taxes.
Yeah. You definitely have to set some aside for taxes, especially the chunks of money that you're making, especially in wholesaling and different aspects of real estate. So just going back and seeing what deals have you done, and then how much money you spent, and then also setting aside for taxes. A lot of people forget that, like even celebrities
Yeah.
forget to pay their taxes, or
Yeah.
they
Athletes.
intentionally forget to you know pay their taxes. But the tax man is going to come get you either way, so you got to account for that. um, and that's really important, especially when you're having LLC, and it affects your personal finances as well too. So
Mhm.
when you file your, I'm not a tax expert or anything like that, but I'm just saying is that when you file your individual taxes, you also have to file your business taxes because it's
Yep.
attached to you on the LLC. So
Mhm.
but so just you got to make sure that you account for that for sure. And you can do it on a kind of monthly basis, or you can do it on a quarterly basis. um, some people do it yearly, but I wouldn't suggest that, just because you could be short, or you spent a little bit more money and not saved some more money
Mhm.
on taxes. So
Right. Yeah, and it's doing these little things like doing reconciliation of like say you bought a lot of times.
hmm
I think most of us use QuickBooks that's connected to our
yep,
bank
that's
account, or
yeah.
what credit card, business credit card, whatever. But sometimes maybe we'll pay stuff and like we'll have a receipt. It's important that you do that. I don't do that as consistently, so that's a habit I need to start, or my wife needs to. I need to get her going
I know.
consistently.
Yeah.
But these are just sort of little habits that you should do anyways for your personals, and because I've done it where the 12th hour where it's like I work with a tax professional, and they're like, okay, I need this stuff by this date, and then you're like cramming, pulling an
hmm
all-nighter trying to organize everything in QuickBooks and stuff. And that's not how I roll, and I really don't like that. So it's a good way to build these really good habits, behaviors, um, early on, so that it's like clockwork. You have a system set in place. So if you're doing it on a weekly basis, monthly or quarterly, it's a lot easier at the end because it's not as much work up front. So really, really, really good tip. But profit first, going back to that in terms of allocation, and allocation means, okay, I have a chunk of money, I just closed a deal, and I have these different buckets that I put this money in. And so the profit first model is like you have profit, the profit bucket, you
Mm-hmm.
have the owner's compensation bucket, you have taxes, and you have expenses. So what's profit? Profit is what goes to you. This is what they talk about is like people usually don't pay themselves first, but that's the best
Mm-hmm.
way for you to like actually earn a living and actually make some money. So usually depending on what your bracket will just go, I think the first bracket is either 0 to 250K.
Mm-hmm.
I don't know if it's a year. I think it's a year. Usually the percentage allocations are profit is 5%. So say you got $5,000. What's 5% of that? I don't know. I can't really do the math, but like we'll just take 5% of like say the $1,000 goes
Mm-hmm.
to you personally. That's money to
Right.
you. You can transfer it to your personal bank account. You just got paid. Owner's compensation is uh, you're considering yourself as for working in the business. That's owner's
Right.
compensation.
Right.
So, and I think that's usually 50%. So that's what you're paying yourself to by working in the business. I think when you have like employees, I think either it's another bucket or you use this bucket to pay your employees. I can't remember exactly, but
Mm-hmm.
that's usually 50%. Taxes, you want to take 15% of your deal, and this is for every deal that comes in. So you have any income that
Mm-hmm.
comes into your business bank account, you want to follow these um, this model. So 50% for taxes, and then expenses. So this is like stuff coming out. So if it's services, tools, whatever it is, you're putting in 30% of your income to this bucket. So it's really simple.
Mm-hmm.
Like once you break it down like that, is you have like small little buckets that you're putting or envelopes, however you want to call it, where you're putting money in after every deal. And the whole point of this is like, it's not just one big account where a lot of times people make that mistake is they just have one single bank account that like functions
Mm-hmm.
as like money coming in, money coming out. And stuff is like super disorganized. So by creating different bank accounts or envelopes, depending on your bank, sometimes they do follow the profit first. Maybe they have like an envelope where you can allocate stuff. By doing this, you have a much broader view of like what's going on in your business. You can be like, okay, owner's compensation, I'm good. Or it's like, especially if you're balling on a budget and you just close like your first deal, you're like, okay, I
Mm-hmm.
have $500 for the next for my expenses. I found $500 for my expenses.
Right.
How far can this stretch me? Instead of like, okay, I just got $1,000, I'm gonna spend this all on this. Um, it's just it's just these are really good behaviors or good habits that will really trickle into as you close more deals. So that is the profit first principles. Definitely recommend you guys check it out and checking out the profit first REI book. Because that one is really
Mm.
cool because that one specifically tailors to real estate investors.
Now, what's the difference between maybe doing that rather than, getting a software like QuickBooks that kind of already kind of allocates or everything out for you? Maybe it's more discipline, or is it, what do you think is the difference there?
Yeah, where you still want I would think you still want a software for like QuickBooks because that's more for like your accounting tax purposes, right? Or like because at the end of the year you can pull reports instead of
Mm-hmm.
like because if you didn't have
Absolutely.
a tool like QuickBooks, how are you tracking? You're using your bank account.
Exactly.
So
Exactly.
by checking every single expense that comes in, that's more, I think, for on the accounting side or like, tax purposes. And then for the profit first, that's more of like the money allocation of like,
Mm-hmm.
what can I afford? And then QuickBooks kind of gives you the visibility on like what you actually
Right.
spent, the line items.
Yeah.
But it is discipline because how many people are like, go overboard or again don't have that
Yeah.
visibility, but you can apply this to anything, not only any business, but that's one thing I want to apply this to is like my personal stuff too, where it's like, okay, this goes to
Mm-hmm.
expenses, this goes to a rainy day, this goes to savings or whatever the case may be. um, that's why the profit first REI is really great, because it talks about like, hey, if you're a flipper, or if you're a buy and hold investor, like have
Right.
multifamily, you can allocate this for maintenance, for rent
Mhm.
collection, like just stuff like that, that's
Mhm.
just a lot more streamlined, and where you're in control of your money. So discipline is key when it comes to budgeting, and some people learn the hard way.
Yeah. 100%. And yeah, I think like we said at the beginning, it's like we people don't think about that aspect, and then
Mm-mm.
when you're in the business, and then you realize like, oh, wow, there's a lot of stuff that is needed or need to be paid, or so um, you did a great job at describing the tools, I guess, with QuickBooks, and then having your separate bank accounts. And I think QuickBooks actually connects you with all those accounts,
Yeah,
so
it's so nice.
you're organized in that way too. Yeah. So.
Yeah, you can also apply like rules. I think that's one thing I need to probably systematize, or just hire an accountant at some point to like organize that. Where if they know
Mhm.
like these are always the same expenses coming in, I can automatically create a rule where if it comes from here, label it in this category, or
Yeah.
whatever the case may be. So
Yeah.
there's like little stuff you can do to make your lives a little bit easier when it come tax season. Um, but so many people, you have closing all these deals, and
Mhm.
they don't know, like when it comes to taxes, like what am I supposed to do, like and that's kind of where you get yourself in a little bit of trouble. So
Yeah.
get a tool like QuickBooks, and then if you're closing deals like pretty consistently,
Mhm.
definitely hire like a professional, or at least have somebody look into it. um, because that's what's going to really take you far in like analyzing how much money you make and stuff like that.
Mhm. Because like we're talking about kind of time blocking, and then setting aside time. So that's probably one aspect of your time blocking you need to set aside, like on a weekend or something like that, to where you're analyzing that, and then reconciling your expenses, and then making sure that everything's in order on your books. It could be once a
Right.
week or twice a week or whatever the case may be, but as long as you do that, so you're not rushing come tax time to get it all done, and getting that information to your accountant, or your tax person to
Right.
file. So just having that all in order first, then you're going to be good to go.
Yeah. I also keep a spreadsheet that I monitor every month, and I compare it to like my expenses. So I'll either look at my
Mm,
QuickBooks, but I'm like, okay, these are all the services I use. And it's kind of like a fixed expense versus variable expense. Fixed meaning it's consistent,
mm-hmm,
the same amount every month, versus variable that is like it give or takes, it may change, it may not change. So, for example, like
mm-hmm,
text messaging, for the most part, it's pretty consistent. But
mm-hmm,
if it's on and off, because you are charged by the number of texts that go out, and the more texts that you send out, the more you're charged. So sometimes that's a variable expense. Just like silly stuff, like even my mailbox, like I have a
mm-hmm.
virtual mailbox sometimes, because
Yeah.
they shred stuff or recycle, and maybe up and down, just like little stuff like that, to really give me a high level view, and like how much funds I have before I'm like, okay, especially in the beginning, I was like, okay, how long will this last me until I have to use some of my personal funds from my,
Right.
9 to 5. And so this also motivates you. We're like, all right, I need to, kick into gear, and start,
Mm-hmm,
closing some deals. But these are just things that I do to really help me out. And I check that spreadsheet on a monthly basis, and I create a new tab, and then just update things.
mm-hmm,
So if I cancel a subscription, or if I'm thinking about like, okay, this I don't use this subscription anymore, and that's why it's important to have this visibility.
mm-hmm.
So like writing down all of your services, and being
Mm-hmm.
like, have I used this service? Like,
Yeah.
or is this helping me close more deals? No. Okay. Or I don't need this right now. I'm doing the most with this. Um,
Mm-hmm.
let me cancel this service, and then you kind of can adjust, and I can see how much money I'm saving or stuff like that. So those are just little things that I've done.
No, those are good gems because I think you writing down all those services that you do because I think what we said before is that you may forget or you're not looking at your expenses that often, so they could be taking you for let's say $100 or $200 in the last couple months, right? So you should
Yeah.
have to look at that, and your idea of writing it down and then looking at it every month and making sure that that's what you're actually spending on, and allocating whatever you need to towards that, but also cutting it if you need to.
Yeah, that's the hard that's and it's I feel like these sort of habits help in your personal life too. I was not my dad was really frugal growing up. Love him to death. But I'm like, bruh, like come on. Like, can we just do this or that when I was like younger? But I understood like, he was a single dad and like he had two kids, so you
Mm-hmm.
have to be as cautious. But I never knew. I didn't like really get my first like debit card or card until I was a little bit older, like almost graduating high school or even like 18. Like that's how like I had no idea like how to budget. I was so bad at like managing my money. So
Mm-hmm.
it's if you're good at
Yeah, me
that
too.
already going in, you should be fine. But these are habits I had to create myself, and it wasn't comfortable. There was times where I'm like, oh, I don't want to do this because it's to
Mm-hmm.
me, it's not my strengths. But
Yeah.
I knew that early on. Um, and I know like, okay, once I close more deals, I'm definitely hiring a bookkeeper, an accountant, because I'm like, I don't want to deal with this stuff. um but it's these are important habits that when you because whatever habits you're building now, I would assume like when you close more deals or a millionaire, you're gonna need these sort of like create these systems and habits, because otherwise that's how you lose your money. Like you can
Mm-hmm.
close as many
Mm-hmm.
deals, but if you're spending it all, I know so many people who have like a huge team are closing maybe like 100K worth of deals, but they're spending like 90K or 95K,
Mm-hmm.
and they're only like
Yeah.
net profit margins are like 5K or something ridiculous, or maybe they're negative. Like that's where
Mm-hmm.
it's because they're spending too much and they need to like reel things back. So these are just like little things that I think will help you out as you make more money. So don't think like you see people on IG or whatever, like flaunting, like, oh yeah, we just, closed 6 figures this month. But it's like, all right, but how much money are you spending now? So like
Mm-hmm.
these are kind of things I've learned early on to really look at. I want to squeeze as much money to myself. So
Yeah. Exactly.
what am I spending on to do that?
Yeah. You have to look. I know, like with other businesses, and this one as well, is this like the profit margin and that percentage, what that looks like. If you have a low profit margin, that's really you're not making any kind of money within the company, right? So
Right.
you want to increase that profit margin as much as you can, and that goes into like when businesses, especially like during the recession and stuff, so they're trying to um, increase their revenue. So what they do is one of the biggest expenses for the company is salaries, right, or
Right.
employees. So the first thing they usually kind of cut is that.
Right.
For that, they're not going to cut the marketing. They're not going to cut things that actually bring in business. They're going to cut some workflow that actually someone can pick up the slack if someone isn't there, right? So
Right.
they that increases their profit margin by if they let go a certain amount of percent of employees, then they're like, okay, now we're at this profit margin. So
Right.
usually around 40 to 50% is ideal. Um,
Yeah.
so
Salary taxes
it's
too, from what
hmm
I've noticed, is like really crazy, especially depending on the state. I'm sure California is not the best, but that's one thing I've learned with like the company I work at, where they're like uh, it's payroll tax, I think. Payroll
yeah, payroll
tax, where
tax,
it's
yeah.
like that's why, like you said, I think that's a really great point, especially as you're building your team. That's why I'm like, I don't want a huge team. I want like maybe
Mm-hmm.
like five
Lean and mean.
people, lean and mean. That's like most efficient way. And when you're lean like that, you really have to rely on your systems and your process and have really strong employees that maybe do a little bit of this and that. But that's really all you need if
Mm-hmm.
you're streamlined and everything like that. But um, I did want to kind of go into how when you do close a deal, it does kind of affect your budget because you, especially like if you're not used to getting like sort of consistent income like that, and then you close some deals, like when is the right time to know like, okay, I need to increase my budget in this or in marketing, or I need to do this. You who've closed like a pretty big deal, and
Mm-hmm.
will be, what are some tips you suggest when you have a budget and like close a deal, like how does that affect your budget, and when do you kind of know it's time to re-up or go up, I guess.
I think it all depends on where you're at in your business. One, two, it's kind of being aware of like what the ideal amount is coming in too. So like I know I have a spreadsheet of all my deals and what those percentage of uh, of those are going to close, and then how much will be brought in, and then what I can do is
Hmm.
can allocate those funds for marketing or getting more service based help, I guess, with different things, because we have the podcast, and then we have different deals within you know different parts of my company. So it's
Hmm.
it's definitely a situation where I have to look at that number, and then see where I need to increase the scale, and where I don't, right? And I kind of look at those numbers and see what that looks like. And so for me, when let's say a chunk comes in, I have to see like what am I paying first, and that's basically yourself, and then how
Right.
much of that percentage goes to the bills and stuff, like at your business expenses, and then where can I ramp up on marketing to bring in more. So mine's set up a little bit different. A lot of people's
Hmm.
wholesaling business is set up to where like they throw more as their income increases. They more in marketing, right?
Right,
And
right.
my for my wholesaling businesses, it's a little bit different because um, I do a lot of kind of JV, and then also
Hmm.
me ramping up is a certain percentage because of my workload, right? If I
Right.
ramp up, um, in marketing, can I handle that workload for um, this side of the business? Because the other
Hmm.
side of the business is kind of really busy right now. So,
Right.
and then, consulting with you and, my mentors on like, okay, do I need to ramp up on help on that side as well? Because if I'm bringing in more money on that side, then I can now hire more people to help me out on that, so I can concentrate on the other side of the business, on the commercial
Mm.
side, let's say. So
Right.
that's kind of the things that I'm looking at as deals come through, and closing deals, and getting that income in.
Yeah, that's huge. And I liked how you mentioned like everyone's different. Like you're like, my marketing strategy is different than others. Yours more like relationship based. There's not really a cost to that besides just reaching out to people, maybe like a
Hmm.
LinkedIn membership, maybe, I don't know.
Right,
So
right.
you can message as many people and stalk them a little bit. But I think Eric was on here a couple weeks ago.
Hmm.
Who's he's doing pretty good, and he was talking about like
Hmm.
knowing when
Doing
it's
good.
time to hire a VA, like 3 to 4 months of
Hmm.
pay at least, because once you hire someone on, like it's not everyone's going to work out, but that's kind of the hope where these people are relying on you. So if you hire a VA or bring on someone in-house, you have to at least have some capital there to last at least a good amount, 3 to 4 months, like you said. Or
Yeah,
maybe you want to go into a
exactly.
new marketing channel because, if you know your market, you're like, I've been doing cold call or SMS, and some people just stick with that, and that's fine. But maybe other people like, well, I want to get into ads, Google ads or Facebook ads, or this because I have an extra chunk of money. And so this is why, like, understanding your expenses too. So if you know, okay, I just closed some deals, I have this spreadsheet. Um, Typically my marketing is like $300, but now I have an extra, because if you follow the profit first, you have your expenses bucket. So if typically your expenses bucket is like 300 and now it's like over 1,000, you have some money to play
Mm-hmm.
with because it's in that bucket. You're not like
Yeah.
dipping into your profit or your
Mm-hmm.
taxes. That's where I think people get, really in trouble because they're dipping into different boxes when they shouldn't be. So now you're like,
Right.
oh, I have an extra $1,000, and usually my expenses are $300 a month. What where is an area that I want to focus on, or maybe you want
Mm-hmm.
to double down on the marketing channel that you've been using. You're like, okay, well now I want to send out more text messages or whatever the case may be. So I think this is where building those habits of like routinely checking stuff is what takes you farther, and you kind of know what to
Mm-hmm.
do with that money. Because I think that's the biggest thing of like, oh shit, I'm making all this money, all these deals. Like, where does
Mm-hmm.
it go? So I think installing like a profit first will kind of give you that visibility. You can even create more accounts to be like, okay, well, this I want to do for just
Right.
my rainy day, or if something goes bad, or you buy and hold, like I talked about earlier. So I think
Mm-hmm.
these all habits kind of build towards that when you have more money, you can slowly start scaling.
Mm-hmm.
Maybe you want to invest in a coach, and you have some extra funds, stuff like that. I think goes a
Mm-hmm.
long way.
Yeah, I think it depends on your strategy on your business too. Like you could set aside money for investing in property, right? So
Mhm.
as you're, you know, having this income come in or this revenue come in, then you can set aside a bucket just for like investment properties in the future,
Yeah,
right?
anything.
So you stack that up and then you purchase and now that you may buy and hold or you fix it, flip it, or hotel, whatever the case may be. You do with that, you have that cash or use that cash for um, yeah, lending, right? So you can use that to lend for transactional funds. For it's another side of your business when you have that much money saved up, and
Right.
you could use it to benefit your company for sure.
Yeah, for sure. And also one thing I've learned too from reading the Profit First REI or listening to it is he mentioned obviously with every business venture. So if you have a buy and hold LLC or a few, you should have a different bank account for each one of those, and then create the
Mm-hmm.
different buckets from there. So everything should be separated, and because come tax season, you can't have your wholesaling and your rental business and your fix and flip all in one, and people have done that. Like, that sounds like an accounting
Mm-hmm.
nightmare. So these
Yeah.
are kind of mistakes that people have made, and they are like now learned like, okay, this is a way to really streamline things, and you have visibility where it's like, that feeling where you go and click your bank account and you're like, you don't want to look at it. You're kind of like, you're scared to look. You're like, look at it with one eye and you're like, shit, I don't know how much money I have left. Instead
Right.
of that,
Right.
because when you have the allocations, the proper allocation set, you knock that fear out because you should have that visibility on there. But these are kind of like really good things that I do plan to do. Once because our plan is to create an LLC for the podcast, and build
Mm-hmm.
off of that, and that would just be another another business where we kind of create those funnels, right? Where we would set up a business bank account, have the different buckets, like,
Mm-hmm.
okay, we got some income from either the course or from this and that. And we're going to allocate them into different buckets. You do that for anything, like I've said earlier. Um, so really, really cool stuff because, yeah, I don't think enough people really go into the nicks and crannies of me unless you read books like that. But I haven't really seen.
Mm-hmm.
I mean, they talk about profit first, but not in like detail. And I know we're not like at the scale of like we're getting there. But I think these are just things
Mm-hmm.
that we've learned, or just by talking to other people, or what people have shared with us. For us to follow. And we're kind of an example of like people really building the infrastructure first to then be able to take it to the next
Right.
level. We'll be ready with the system set in place.
Yeah. It's definitely not the sexy side of the business for sure. It's like the
It's boring as
tedious
hell.
side of the things that you kind of have to do, or so a lot of people procrastinate on it. But if you're ahead of it and you put it a part of your process, then it's just going to be second nature, a part of your business, right? So I think you know the more comfortable you do and the more routine that you get with it, it's going to be easier for you to kind of get everything uh, in your ducks in a row by the time tax season comes. So that's the important thing, is that like you just want to make sure that you're not rushing. You have all this done, and you're setting aside buckets for different things that you want to do within your business. So
Yeah, absolutely. Well, my question to you, Tim, is you got some deals, some pretty big deals coming up. What's kind of some things you're planning to do with it? Not to get in your business like that, but like in terms of like the business,
it's all good.
you're all planning to buy a
Well,
yacht?
no, I think a lot of it is going to try to put back into the business on the wholesaling side, and then also putting back into the business um, on the commercial side, and then kind of investing in myself with different education platforms, I guess, and
Mhm.
opportunities, but also setting aside stuff to actually take down, right? Because right now is the best time to kind of stack. And then,
Mhm.
when I think Chris had mentioned it yesterday on a call, is like, it could be a year or 2 years when we actually get to the point where we can, you know, um, use this money to actually buy at a good price. So it's just kind of waiting for that bottom, I guess. But
Mhm.
um, so just kind of stacking that money as much as I can, and then investing in it. That's kind of investing back into the company, but also in myself, and then investing in assets, kind of going forward. So
I love
that's
it.
kind of the plan for this income coming in for the business.
I love that. I mean, that's what it is. I think early on, like people again close some deals and go party, which is fine. Yeah, you gotta celebrate, but when you gotta start over again, you're like, oh snap, you mean I gotta do this again?
I know, right?
It does require discipline. It is really really tough,
Mm-hmm.
especially I'm sure with like more deals coming in. You easily just want to be able to spend it, but having this proper infrastructure, I think that's super key. And for me as well, I think one of my goals was to invest in myself. So I've
Mm-hmm.
invested in like some education courses on like acquiring more multifamily. That's one thing that you
Mm-hmm.
and I are working close on, or that's
Definitely.
kind of one of our goals. But really leveraging my 9 to 5. Like initially, I wanted to do like house hacking, but it just requires so much work to like have to move
Mm-hmm.
somewhere. I'm like, I don't want to do it in California. Um,
Right.
you know, and deal with like the tenant situation and the laws going on. I'm like, I don't want to have to move cross country to like the Midwest, where I probably would get a good deal. I'm like, I'm not trying to live
Mm-hmm.
in, no offense, guys, but being from California, I'm like, I mean, there's nowhere else I'd want to be.
Yeah.
It's I've had to reanalyze like what is it that I want to do, and like budget wise too, like saving, investing it into investing it into stocks, like just putting a lot of my money. And this is kind of what I'm doing personally with my 9 to 5 is, my
Mm-hmm.
wife works, and then I have my income. So living off of one of our incomes to like pay the bills, and then the other income should
Mm.
be to invest, invest in the business if needed, and save. Like just have like a rainy day
Yeah.
fund,
That's a good idea.
um, because and that's tough. That's where discipline really takes in. Like, if you see that extra money in the bank account, you're like, oh man, but I see those shoes, I see them J's. I'm like, or this trip. And that's why one of my goals this year was to also like work on my credit and get
Mm-hmm.
business credit, because I'm trying to get them points. So I was able to use a lot of the points
Sure.
from signing up to pay for a trip coming up in September. So these are just the smart stuff that I don't know why I didn't do before. It's just it just finally clicked for me. But it all starts with like your budgeting and like your discipline with
Mm-hmm.
that. So for me, I'm going to be hiring a mentor probably this quarter, and like investing in myself. And then um, I think also with budget and stuff, you kind of want to for me, it's like what stuff that's working in my business that's bringing in
Mm.
deals. A lot of times people sway away with that because they see a shiny object of like, oh, do this. I've been doing this here, and then they like completely pivot to do that, and then it just doesn't work out.
Yeah.
So I'm trying to like, because my goal is to remain lean. I'm like, okay, what is actually working? What am I struggling with in my business, or what could I use help? Obviously, I have a 9 to 5, so hiring a really strong VA. I'm just
Mm-hmm.
not like there yet. I'm like, I want more runway, because I don't want to have to go back and forth again. So really being disciplined on that front, because it's easily like when you even close like a couple deals to be like, okay, I'm gonna hire this and that. But because of the wholesaling business, all about consistency.
Yeah.
That's like a really important thing, that you want to focus on first. Focus on your process, um, and your education. So all of that to say, my goal with like acquiring properties is like, let me leverage my 9 to 5. Okay, if I have to put 20% down to buy like a commercial multifamily, so like a
Mm-hmm.
5+ unit, to speed track things.
Yeah.
Okay, where's that 20K come from? I can either save a little bit, get some from the deals, like we talked about, like having a bucket of like, savings, or this is a fund for this, or I can pull
Absolutely.
out my 401k. There's so many like avenues that I can use it for. But I'm like we can't wait. I'm like, we have to buy assets. So with that, it starts with your
100%.
budget. If you want
Mm-hmm.
to acquire assets, you have to get your budget in line. And I'm getting there. It's been really tough because I really don't like it. Clearly, I need a hire. That should probably be my first hire because it's just
Yeah.
like
Exactly.
it's such
Right.
a tedious thing.
It is very tedious, and I've done a good job of trying to allocate time just to concentrate on that. I might skip a week or two, but I go back to it because I know that it's going to be a longer haul when
Yeah.
you know it comes down to it. If I'm skipping like 6-7 months or something like that and not doing it, then it just becomes more of a hassle. So just kind of work it into your routine, and that's my kind of big advice is just it may be tedious, and last thing you want to do is that, but it's definitely an important aspect of your business and to keep things moving and profitable for you.
Yeah, really, really great advice. Yeah, and as we kind of close out here, kind of recapping kind of our tips is like understanding, coming in with a plan, like especially if you're starting out, your budget may be really, really tight. So being like, okay, what can I do for $100 a month? What can I do for $300 a month? And sticking
Mm-hmm.
to that, because it's all about your profit margin. So you want to keep your expenses as low as possible without it affecting your business, of course. So doing routine checkups of like what your expenses are, what services you're using. I do
Mm-hmm.
it every month. I look back and like, what did I spend? Am I wasting money? Am I using? Is that necessary? Am I, you want to audit as much as often as possible. The other is allocating money. So profit, using the profit first strategy. I've said before, profit first REI, really, really great book because it's geared towards real estate investors. They talk about wholesaling, fix and
Mm-hmm.
flipping, rent and hold, how to allocate the money. Profit first. So profit, owner's compensation, taxes, expenses, but you can create other buckets as well, and use it for different ventures. And knowing when it's a good time to increase your budget. If your goal is to hire a VA, you should have 3 or 4 months of pay. If your goal is to enter a new marketing channel, you got to understand and
Mm-hmm.
plan out. Okay, Google Ads is going to cost me this extra much a month.
Mm-hmm. Mm-hmm.
Um, how much runway do I have for that? If I only have it, if I'll be out of funds after a month, it probably doesn't make sense to go into that right now. I need to close more deals. So just stuff like that, just to mentally run those checks, and also just kind of really creating the infrastructure, like QuickBooks. Obviously, you want a business bank account. Separate those expenses. Um, and that's it. Did I miss anything? I think I recapped most of
No,
it.
I think no, I think that you did a good job there, and I, I can't stress like it's what's needed, right? And uh, don't forget about it because that's what you do when you first start, and you have all these
Yeah,
things
you're
and
working
what
on
you
so
need to
many other
get.
things.
Yeah, yeah. So just don't forget about it. Um, Add it to your things that you need to do when you start, and just like you had mentioned, just put it in the right steps, right? What you need to do and allocate what you need to do to put it in different buckets. So I think that's
Love it.
super important.
Yeah, my biggest thing is, and it's something I'm still working on, clearly, but like take small steps, like whatever we talked about, like take one thing where you feel like it can improve, whether it's allocation. You start it now. Like that's one thing that they mentioned in the book. Like don't wait until you close your next deal. Like if you have some money in your
Mm-hmm.
business bank account, like allocate it now. There's some like really good banks that do the profit first. If you just type in profit first REI, definitely get the book. But I think he has a website too on like the banks that offer profit first. Like start
Mm-hmm.
there, or like start by
Yep.
getting a QuickBooks and connecting it to your business bank account or your business credit card. Just do little baby steps. Like with anything, with any goals, like there should be financial goals as well that you want to track.
Absolutely.
So like start small and then build off of that. That's really all I would recommend for people that haven't really done this before. And those that have and have their systems in place, they probably have an accountant, bookkeeper, but doesn't mean that they don't
Mm-hmm.
have goals either, or want to improve on stuff. So um,
Absolutely.
yeah, but appreciate you guys tuning in. Hope this was really helpful. Of course, you guys can replay it. We talked a lot about what either we're doing or what we've learned from others. Um, we'll be back next week, hopefully live.
Mm-hmm.
I moved to
Yeah.
LA this weekend. So
Yeah.
yeah, I may need a meetup. I don't think I'll have a desk by next week. So may need a meet up at
All good.
some bougie hotel or something. You're usually
Yeah, we'll
like
make it
found
happen.
somewhere
Yeah,
nice.
we'll
So
make it happen.
yeah, we may do a live
On
thing, but
location.
one on location. Yeah, doing it live. It's been a while. Yeah, appreciate it. Yeah, really, really excited for that. But yeah, and we're hoping to get some more guests. We're still kind of working on that. I really want to do a credit podcast or episode,
Cool.
going over some experts. We've done some credit stuff, but yeah, feel free to hit us up on IG at Real Estate Gladia, at Mr. Tim REI, or Get the Bag podcast on IG, get_the bag podcast. Yeah, reach out to us if you need anything. Appreciate everybody. Enjoy the rest of your week, and we'll catch y'all next week.
Yep. Appreciate it.
All right. Later, guys.
Peace.